Index Funds, Passive Income Idea for Complete Beginners, a stock marketing investment strategy that withstood the test of time, by Armani Murphy, narrated by Rick Stevens. Introduction. Personal notes from the author. You've probably heard of index funds in the past, but perhaps not in a way that gives you a clear idea of what they are, how they work, or why they're worth your time. Hence the fact that you're listening to this ebook. I'll be honest with you here. There was a time not so long ago when I was in exactly the same boat. I was just like you, with some small knowledge of what index funds were, and a few stories of how well they had panned out for others, but no real idea of how to turn them into something worthwhile for me. I didn't even know if they were a useful avenue of passive income in my individual circumstances. That's when I started to do the research. There's a lot of information out there, and some misinformation as well. For instance, in your own research, you may stumble across those who claim that this is a zero-risk, 100% guaranteed return on investment with no work involved whatsoever. Don't be misled. That is not true. Like all passive income avenues, there is a certain amount of work involved, especially at the beginning when you are setting your portfolio up. And there will be some checking in and maintenance to do. But don't be discouraged, because it is true that index funds are two things: low initial cost, low ongoing maintenance. Those two factors, and the fact that index funds don't require a regular amount of invested time each day or week, make this a viable passive income area for those who are looking to make extra income without having to sacrifice a lot of extra time. And the fact that index funds can provide long-range yields means that this passive income avenue is an excellent way to provide for your future, even thinking forward to your retirement and beyond. So, to start out this book by focusing on the potential benefits of index funds for you as an individual, I'd like you to consider the following questions. What are my goals in making passive income through index funds? How much am I willing to invest in the beginning? How much time do I want to spend maintaining my portfolio, and how much do I want to hand off to my investment manager? What is my time frame for my investments? All of these questions will play into how you personally set up and maintain your portfolio. So keep them in mind as you go through the information, and let your answers help you decide the best way to build for your future. Passive income in general is something that I 100% recommend. No matter what you do for a living or what your goals are, finding alternative ways to make money without investing more time and effort can only be a win-win situation. And there are so many ways to bring in a new passive income flow. Index funds could be your next big passive income generator. The only way to find out is to learn more about how the process works. So let's get into it. Chapter 1. Laying the groundwork for your future. How index funds work and what terms you need to know. I think the best way to actually get this book off the ground is to say, welcome to the world of index funds. Let's talk about what they are. Index fund definition. An index fund is a portfolio that is set up to mimic the way that a section of the stock market, or a stock market index, behaves. This portfolio is made up of stocks and bonds and reflects a section of the market rather than requiring the investor to pick and choose individual securities. By choosing to invest in a larger amount of the market rather than individual securities, your investment evens out by matching the performance of that broader index. Your portfolio will follow the benchmark index regardless of the state of individual markets. In the most basic terms, it's like putting a smaller amount of investment in a broader array of securities rather than a larger amount of investment in only one or two securities. It's like playing several numbers on the roulette wheel instead of putting it all on red 21. Obviously, that means that your investment is more secure. In fact, most experts state that it's very difficult to completely lose all your money that you invest in index funds. It would take active mismanagement, a complete lack of attention,
Sample complete. Ready to continue?